There has been official start to the great eating. It's not Thanksgiving, you understand. That's what I mean by great gobbling up of XRP, because $1 billion was just raised while the rest of the market was paid attention to news stories. And it's about to be put into XRP straight. That's not a story. It's taking place. There is a new company called Evernorth that just revealed a $1 billion capital raise. Most of those funds are being used to buy XRP on the open market, according to their own statement. This isn't advice about money. This is where things get crazy. Evernorth isn't just another business that deals in digital goods. It could be the XRP company, the same thing that MicroStrategy did for Bitcoin. You know how Michael Saylor built his whole business around collecting Bitcoin as a cash reserve? The same thing is what Evernorth wants to do. But with XRP, they say they are the biggest public XRP money market fund in the world. Plus, these aren't just any new businesses. We're talking about soldiers with ties to Ripple. Institutions like SBI Holdings back the company, and leaders who have a lot of experience with payments around the world. That's why this moment is so important, because these moves aren't made next week or next quarter. They're made to last 10 years. Now, in the XRP Millionaire Blueprint, I explain in detail how the top 1% of buyers set themselves up before the rest of the world even knows what's going on. It's a full guide that includes a document, an infographic, and a movie that show the exact strategy that top investors are using right now to get ready for this huge change in global finance. It's in the message that's been pinned below this video. Let's get back to what's really going on. Evernorth says that they want to use XRP for business lending, DeFi, and providing liquidity. This means using XRP as a base for making money and trading on the market. Their goal is to hold more XRP per share over time. ETFs can't do that. An ETF just watches the price go up and down. Evernorth, on the other hand, wants to actively raise the amount of XRP that backs each share, making it the first of its kind. This isn't coming from developers or leaders who don't want to be named. Ashish Birla is the CEO. He has been with Ripple for a long time and helped make RippleNet one of the world's most popular blockchain-based payment networks. He knows more than most people about how to connect traditional banking to the XRP ledger. Things get even more interesting, though. David Schwartz, one of the original developers of XRP and Chief Technology Officer of Ripple, has said that he will be leaving Ripple to become a strategic advisor at Evernorth. Take that in. The person who helped make the XRP system will now tell the company that is about to buy XRP off the open market that it might be worth billions of dollars. It's clear that this isn't a one-time thing when you start to connect the dots. This is a coordinated attempt to scale up. The people in charge of Ripple, big investors, and crypto-native companies are all working together toward the same goal, making XRP more liquid. Right now, these are the numbers. The most recent data shows that there are still about 3.3 billion XRP on platforms around the world. That's not stock that's moving. That is the real thing that can be bought. Now, Evernorth's $1 billion allocation could take away about a third of that from the open market, but it depends on how it's carried out. That's not even taking into account ETFs, other big desks, or demand from regular people. People are really confused about this math. At a price of 60 cents per XRP, $3.3 billion worth of XRP is worth just under $2 billion in cash. But when institutional buy plans, possible ETF inflows, and new Treasury vehicles like Evernorth are taken into account, the scenario for supply shock becomes very real. Take a look at the same situation on a bigger size. The most XRP that can ever be made is $100 billion. But most of them are either locked in escrow, where Ripple will hold them for a long time, or they are already in deep storage. That means the float that can be traded is very small compared to the need for global liquidity that XRP is meant to meet. Think about what will happen when the biggest money transfers, central bank settlements, tokenized securities, and stablecoin on-ramps start needing XRP to instantly move value. When the world's financial bridges start to run through XRP's lines, that shortage is what sets the real price. That's why this Evernorth news is important. It's not about the hype. It has to do with placement. They're making a treasury plan that will give investors access to liquid XRP while also helping the network grow and achieve its yield potential. Take a look at who is active now. Along with Ashish and David Schwartz, Evernorth's leadership team is made up of seasoned professionals from both traditional finance and crypto. Matthew Fryer is CFO, Meg Nakamura is COO, Jessica Jonas is Chief Legal Officer, and Sigar Shah is Chief Business Officer. They have all worked in capital markets, regulatory compliance, and blockchain innovation in the past. On top of that, Brad Garlinghouse, Stuart Alderati, David Schwartz, and Stuart Alderati, CEO of Ripple, are all named as strategic advisors to Evernorth while still ensuring operational independence. That's huge because it means they agree with Ripple's plans for XRP without being directly involved with the company. It keeps the ecosystem spread out while still working together wisely. Brad himself said that Evernorth is meant to make the XRP community more useful, inviting, and trustworthy. And if you've been following Ripple for a while, you know that their main goal has always been to be useful in the real world. This is that goal taken to a bigger, more institutional level. This is where things get really interesting. Armada Acquisition Corp. and Evernorth merged to form the company. 2. A SPAC that is sold on the stock market. Evernorth is likely to trade on the NASDAQ under the ticker XRPM after the deal is done. XRP is traded on the stock market. That way, standard investors who can't or won't hold crypto directly can still get exposure to XRP through a safe way to buy stocks. The deal should go through in the first quarter of 2026, as long as shareholders agree and regulators give the go-ahead. Once everything is done, Evernorth will use the money to build the biggest institutional XRP treasury in the world and put it toward DeFi integrations, validator participation, and network security projects for the XRP system. They even want to use Ripple's RLUSD stablecoin as an entry point into XRP-based decentralized finance. This will open up chances for yield and make it easier for fiat, stablecoins, and XRP to trade with each other. This is the infrastructure layer that connects traditional finance, TradFi, on-demand liquidity, ODL, and autonomous yield if you've been following the bigger picture. XRP acts as a bridge asset, or currency C, as the IMF calls it, making it easier for currency A and currency B to settle. The bridge is now being thought of as a strategic backup. That's what the Great Goblin really is. It's the early stages of large-scale institutional accumulation, when long-term holders who know how XRP will be used in the future to move value buy up all the available supply. And most people in retail still don't know what's being built because it's going slowly and in the background. In spite of this, Evernorth is not the only one. As soon as this plan works, other companies will be rushing to copy it. Treasury-based vehicles, ETFs, and liquidity pools that are built around the clear rules and stability of the XRP network. Because XRP already has the go-ahead, while almost all other digital assets are still trying to be accepted. With over a decade of uptime, deep liquidity corridors, and a DeFi layer that is growing, XRP is in a great situation to become the first digital bridge asset that is truly institutional grade. Right now, we are moving from speculation to structure, from price swings to a clear goal. Right now, the liquidity lines for the next 10 years are being put together. As things change, XRP is at the center of it all. The next time someone talks about the Great Goblin, remember what it means. It's not a joke, it's a message, a sign that the phase of quiet gathering has begun. As Evernorth gets ready to let the public directly trade XRP, one question still stands. Who will still have XRP when there is no more money to buy or sell it? Once you know what Evernorth is doing behind the scenes, you can tell that this isn't just another business getting a digital asset. This is the start of the institutional age for XRP. Take a look. Not only did MicroStrategy start buying Bitcoin, but many other companies did too. It was about proving to Wall Street that a whole class of assets was safe. In this case, XRP is going through the same thing. Same trend, but with a different asset, a different decade, and a much bigger effect that could happen. For the simple reason that Evernorth isn't marketing XRP as a speculation coin, they're setting it up as an institutional asset that pays a return. That changes everything. They're not just buying and keeping, they're also taking part in capital market growth, DeFi integrations, validator operations, and liquidity markets. This is how XRP changes from a cryptocurrency to a global finance tool for flexible liquidity. That's what people get wrong. A lot of people still only look at XRP's price charts and not how it's being used in real life. The model changes, though, when capital structures start to form around it. With Ashish Birla in charge, you have someone who built Ripple's business payment network. This isn't just any startup CEO. This person is already talking to banks, payment providers, and officials about how blockchain can be used for settlement. Now he's building a public company with help from Ripple, SBI, Kraken, and even former Ripple leaders like David Schwartz. There's no chance in this. It's the handoff from Ripple, the company, to a decentralized environment run by big players in the business world. Also, let's not forget about that time. The deal is set to finish in early 2026, so they're building this before the global rollout of digital finance frameworks, tokenized assets, real-world asset payments, on-chain treasuries, and CBDC infrastructure that works with other systems. Evernorth is pretty much ahead of that whole wave. When they go public, they make it possible for institutions that want to invest in XRP but don't want to keep it themselves to do so in a regulated way. It's the perfect link between regular banking and cash on the blockchain. That's what it means to be a treasury vehicle. They want XRP to be a strategic reserve asset that makes money by being useful. They don't just sit on XRP, they use it. This is called an active treasury model. They risk it, lend it, and use it to keep the network liquid. That's why their system is meant to make XRP per share go up over time. The more action there is, the more value holders get. It's the exact opposite of the passive ETF approach. More like a liquidity provider that is sold on the stock market. Don't forget that they raised more than $1 billion. Most of that money is going straight to buy XRP on the open market. That's not just an idea, it's made very clear in their application. That's a pretty crazy picture when you think about the 3.3 billion XRP that is still on platforms. If they only buy $1 billion worth, that's the same as taking in about a quarter of all the XRP that's available. That's why it's known as the Great Gobbling. And that's only one thing. More ETFs are on the way, liquidity providers are building up their positions, and sovereign-grade financial products are still being worked on. Now think about what that means for supply and demand. XRP doesn't need a rush of speculation to move. It only needs to be accepted. Each institutional buyer takes away supply that is already in circulation while also raising usefulness. A supply shock happens in this way. It's not a hype, it's math. You can only have so much XRP, and a huge chunk of it is locked up or not for sale. Every day, less and less of the float can be traded. Plus, Ripple's RLUSD stablecoin will soon be added, which will act as an entry point for DeFi, and you have a full community taking shape. It is likely that Evernorth will use RLUSD for decentralized yield schemes. In turn, this means they'll be able to give XRP against stable collateral, provide liquidity, and take part in DeFi protocols that produce real yield instead of token rewards that are inflated. XRP is now not only a bridge currency, but also an asset that can be used to make money. You're talking about institutional capital that gets a return straight from the new financial systems payment layer. That's really big. Also, the way this is run is important. Evernorth works on its own, but strategically with Ripple. Brad Garlinghouse, Stuart Alderodi, and David Schwartz are all leaders at Ripple. They all work as advisors to make sure that the company follows the rules, has a cohesive strategy, and aligns its ecosystem without giving one person too much power. What this means is that Ripple is no longer the only one who drives XRP's goals. They are now part of a group of institutional makers, and each is in charge of scaling up different parts of the future of the XRP ledger. This is how decentralized banking infrastructure grows and changes. People mined Bitcoin, developers worked on Ethereum. XRP is now in the institutional layer, which is the stage where regulated companies start to use it in capital markets. It has validator nodes, liquidity pools, DeFi lending, and tokenized asset settlement. All of these things come together in one system. The big players are ready now that Evernorth has made his move. David Schwartz's appointment as a strategy advisor is a very important sign. From the beginning, he was in charge of building the XRP system. His move from being CTO of Ripple to being a counselor for a publicly traded XRP-focused company shows that things will stay the same. It means that the same goal, which is global value interoperability, is now being carried out by different groups. The system is built by Ripple. The capital markets layer is built by Evernorth. The environment can take care of itself. Now, validator involvement is one of the most important parts of this announcement that doesn't get enough attention. Evernorth does more than just buy XRP. They also help keep the network safe. In other words, they will run validators to make decentralization and network stability stronger. The ledger is safer and harder to edit when it has more validators. There is a loop of input. The network is stronger when it has more institutional support. The more stable the network is, the more institutions are willing to put money into it. Evernorth also wants to take part in markets for tokenized assets. That's where things might change the most. Real estate, commodities, bonds, and stocks are some of the standard assets that will need neutral settlement rails when they are put on the blockchain. That's exactly what XRP was made to do. A money, C, that can be used to buy and sell assets, A and B. The IMF even used that plan as an example when talking about its own cross-border payment framework. That global settlement middleman will be XRP. If that happens, Evernorth will have the keys to the world's new liquidity engine. That's what makes this so important in history. Infrastructure, rules, and cash are all coming together around XRP at the same time for the first time. Ripple spent years laying the groundwork, going to court, and teaching officials new things. Builders, investors, and companies are now moving it forward. The Great Gobbling isn't just about getting more things, it's also about changing things, moving from guesswork to unity, from pairs of trades to global trains. You can see how clean the structure is on XRP's chart if you zoom out. There is a long accumulation base, volatility is going down, and strong structural catalysts are coming together behind it. When stores get excited, price discovery doesn't happen. It takes place when there isn't enough cash on hand and big buyers step in. Evernorth's spending spree of $1 billion could be the thing that sets off that move. And once things start to move, the computers, Quant funds and ETFs will follow. That's how these changes take place. First slowly, then all at once. People in the market often don't realize how quickly institutional liquidity can change. Do you remember how Bitcoin went from $10,000 to $60,000 in less than a year after MicroStrategy began buying it? That wasn't a store. There was a feedback loop there between institutional desire, story validation, and a lack of cash. The same thing could happen to XRP once Evernorth starts buying it. This time, though, it's not about keeping value. It has to do with making world value transfer possible. That's a much better use case in general. The fact that this is still pretty unknown is what makes it so interesting. While everyone is focused on short-term volatility, the groundwork for a liquidity network worth trillions of dollars is being made right in front of everyone's eyes. The Big Bang isn't just talk. That's the plan. Every buy by an institution, every new validator that goes live, and every DeFi integration makes XRP even more dominant in the long term when it comes to sending money across borders. That's what makes this crypto moment different from all the others we've seen. It's no longer about guesswork. It has to do with integrating. It has to do with getting ready for the infrastructure of the next 10 years. And the fact that Evernorth is stepping in right now should tell you everything you need to know about where this is going forward. We are seeing the beginning stages of financial infrastructure convergence as liquidity starts to gather in the XRP environment. XRP isn't just a way to send money or a speculative currency anymore. In the background, it's slowly becoming the link between traditional banking and decentralized markets. Everything is coming together as it should. The clarity of the rules, the big players, the ways to get cash, and the infrastructure. Everything is working together to make a single network effect. Take a look at how quickly things have changed around XRP in the past year. From courtroom clarity to global connections, a lot has changed. Tokenized settlement is being tried out by central banks. Stablecoins are being made by private companies like Ripple. Now, Evernorth is building the model of an institutional treasury that will keep, use, and grow XRP in a controlled way. That's not noise. That means that a whole class of assets has reached maturity. Once capital markets understand that XRP can be used for more than just payments, it can also be used to move value between different types of digital currencies. It's no longer just a few $billion going back and forth. There are trillions at stake in global settlements, trade finance, digital bonds, and tokenized assets. And that's where Evernorth's plan really shines. Their business doesn't depend on guessing about prices. It depends on how fast real value moves across the XRP system, or throughput. When there is more volume, there is more possibility for yield, and the ecosystem gets stronger. It works like a feedback loop for acceptance. Institutions provide liquidity, which drives use cases. Use cases then bring in more capital, which makes the network grow. The system of XRP was made just for this. High throughput, low fees, and certainty that can't be changed. It's what makes this machine for cash work without any problems. That's why big players are getting involved now, not after the next market boom. The infrastructure step is what they see as the real chance. Take a look. Bitcoin showed there is a digital shortage. Ethereum showed that money can be programmed. XRP is now showing interoperable liquidity, which is the last piece of the puzzle that digital finance was missing. And once you figure out cash, everything else will be possible. So Ripple didn't chase news cycles, but instead worked with regulators and banks for years. It was a long-term plan, and in the end, XRP will be the payment layer of the modern economy. Evernorth is just the next step that makes sense in that plan, a controlled, publicly traded company that was created to hold, use, and grow XRP as a useful asset. It's a way for companies that can't hold crypto directly to get a piece of the ecosystem's growth. It's like adding a new highway to the XRP economy that links the real world of money with the on-chain cash. Don't get it wrong. Money will pour through that door faster than most people think. Liquidity moves in waves, not slowly but quickly. It pools where there is a good return, safety, and room to grow. All three are in XRP. And because the stock on exchanges is always going down, even small flows of money can have big effects on prices. That's the impact of supply shock. We saw the same thing happen when companies first started to buy Bitcoin. The float is smaller for XRP, though, and the use case is much bigger. Long-term experts think this is the most unequal time in XRP's history because of this. But this isn't just about amount of money. It has to do with change. The financial system is being rebuilt in real time, with programmable settlement lines that allow value to move across borders as quickly as data 24 hours a day, 7 days a week. The assets that have clear regulations, real-world use, and infrastructure that is good enough for institutions will be the ones that do well in this change. XRP is perfect in every way. This is why the current phase of consolidation and buildup is so important. It's where views between generations are quietly built up before the story catches up. So if you've been following the breadcrumbs, from references to the IMF to Ripple's stablecoin, From partnerships with SBI to Evernorth's billion-dollar buy, you can see the architecture being built one layer at a time. We've talked about liquidity, compliance, scalability, and now yield creation. It's everything you need for a new age of finance. When regular people start to pay attention, institutions will already be in place, and the way prices move will just show what's been built behind the scenes. In reality, this kind of change doesn't come up on its own. It starts slowly and then all of a sudden. Like how the internet changed the way people talk to each other, this will change the way people trade value. And even though most people are still waiting, the proof is already here. In the partnerships, the regulatory filings, the cash flows, and the way institutions act. Now is not the time to wait for the next bull run. They are laying the groundwork for the next financial system. Not on price charts, but in company filings, capital raises, and partnerships that change what money even means in a digital world. This is the stage where history is made. People who are paying attention right now are setting themselves up to be where the money will move in the future. The dam doesn't just leak, it floods when it breaks. The XRP Millionaire Blueprint can help you stay ahead of the next big financial wave so you don't have to rush to catch it after it's already popular. There is a document, an infographic, a video, and more in this full high-level guide. All of this was made to show you how the top 1% of owners are getting ready for opportunities that will make them rich for generations to come. You'll find inside the tried and true way of thinking and plan for making this change into long-term financial freedom with confidence, clarity, and a plan you can actually use. The XRP Millionaire Blueprint is mentioned in the comment below this video that has been pinned.